Hello and welcome back to Dukascopy TV. Now, we always look to bring you the very latest in technical analysis, and today is no different. I'm joined by Jean-François Owczarczak, Director of Management Joint Trust, and their recently launched product FinGraphs to discuss the euro and other commodities today. Jean-François, thank you very much for joining us.
You're welcome, and thank you very much for having us here at Dukascopy.
Now, if we start with the euro-US dollar, looking at the long term there, this has been trading sort of in a clear range for the last month or so now. Where do you see sort of this heading?
I'm going to turn to our graphics. So this is what we call an investor's view. It is a long to medium term view of the euro against the dollar. On the screen you have a summary graphic which has the whole history, a weekly history, and you could see here you have two zooms, a red zoom and a blue zoom. The red zoom is corresponds to a daily chart, and the blue zoom corresponds to an hourly chart. You could find these zooms at the bottom of the chart here. So you have weekly for long-term investors, daily for medium-term investors, and hourly for short-term investors. The point of FinGraphs is to use a combination of these three graphics to come to a trading conclusion. So if you look at our weekly chart at the moment, you have a big bear on the screen. It means that the downtrend is still valid. The other instruments, and you have a bit of standard deviation envelopes. When they touch each other, that means you're in a point of stress. And these touch each other mid this year. And the reaction from this impact has been a bear market rally. This bear market rally can be monitored on our daily chart, and as you see, the envelope, which is the big yellow band, is still heading up. You also have another instrument, which is the risk index, just above the chart in blue. And for the time being, we left the green zone in July, and we're moving up slowly towards the red zone. For the time being, I would say we're pretty much in the middle of this move, meaning that this bear market rally is not over. Shorter term, you can see that on the hourly, we've been consolidating, as you said, for the last 2-3 weeks, and that slowly the larger envelope has repositioned itself to the uptrend, hence the small bull here, and that the risk index had its oversold condition about a week ago and is now moving back up. So basically, long term, the euro is still in a downtrend. Medium term, it's in a bear market rally, and shorter term, we just had the signal that this bear market rally is going to continue.
You mentioned that short term, that does bring us on to the euro-US dollar in a shorter term. It's opened slightly lower against the dollar this week as traders look for clarity on Spain. How do you expect that to pan out? Well,
looking at the second chart here, this is a trader's view. The same principle applies, just we're looking at intraday frequencies. So here you have a 24-hour, 60-minute chart, a 15-minute chart, and a 4-minute chart. And I would agree that the euro opened sharply lower, but it has bucked this trend very quickly this morning. And if you look at the 60-minute chart, it is still in an uptrend, and the risk index is still in the middle of the range. So that uptrend is confirmed, and there's no big resistance against it yet. On the 15-minute chart, it just recently bucked the trend from this morning, and the larger envelope is heading up since the bull. And we're slowly getting towards what could be an intermediate top as we're approaching the red band. On the 4-minute chart, the uptrend is well confirmed over the very short term, and slowly we're getting to a point where the two envelopes touch each other, hence stress, and the blue index is slowly getting towards the red. So possibly we're going to make in the next hour or so an intermediate top, which is still in an uptrend on the 15-minute chart and is confirmed by a longer-term uptrend on the 60-minute chart. So basically, our trader's view here would confirm our investor's view, which is in a resume uptrend from the several weeks of consolidation we just had.
If we discuss the euro now more in general, it's been sort of largely range-bound sort of since mid-September. We've discussed already against the US dollar, but what about if we take a look with the euro against other currencies now?
Okay, so what I wanted to do here is take a longer-term view of the euro against a panel of the 15 other large currencies. This is called a mosaic view. and it's all the major currencies against the euro. And what you can see is this is a long-term chart, this is a weekly chart, and 13 out of the 15 are still in a long-term downtrend. And so our view is that the euro is getting towards a level which will be interesting to buy against all currencies, but the downtrend is still in place. If we take our institutional product, the decider, we're awaiting a more important bottom on the euro, pretty much mid-second quarter next year, and probably towards the very strong support that we've had around 120. So this is a bear market rally on the euro. The dailies seem to tell us that there's probably another month and a half to go, but then be careful end of this year, early next, into mid-second quarter, because you'll have a retracement on this move. And looking at the long-term trends, well, they're mostly bearish still for the euro.
Thank you, Jean-François. That does now bring us on to our Dukascopy question, which is, if you had $1 million to invest for 1 year, which instrument would you place it in? So if we take a look at the choices that you've got today, we've got real estate, equity, bonds, gold, cash, and oil. So that $1 million, where would you place it?
Well, I'll take a small joker on that, in that I think there's probably an important intermediate top on risk assets towards the month of December this year, which means that until then I'll probably be bullish on gold and equity. Then I'll probably be careful for 3 to 4 months as the consolidation from this intermediate top materializes, and then pretty much from the mid-second quarter next year back into equity, into gold.
So if we select equity there, what are your projections on equities then, sort of in the near and long term?
Well, equity is fully priced. There's a lot of discussion at the moment on after a 3-year bull market rally, shouldn't we be expecting a correction? We think there's probably a few months more to go, and then we will have that intermediate correction, probably between December and the month of May. And from May on, we should be in an uptrend again, and which could probably last towards the end of next year.
Jean-François, thank you very much, and thank you for your comments.
Thank you very much.
We'll be back shortly with more exclusive interviews. For now, though, goodbye.